We're moving through the middle of the trading day, and it's a busy one. I'm Grant Mercer, and this is Storm Stock Solutions, bringing a little clarity through the chaos as we head into the early afternoon session. The big story on the tape right now is Alphabet. According to MarketWatch, Google's parent has rallied about 80% over the last 6 months, riding a powerful wave of AI enthusiasm. That kind of move makes Alphabet one of the hottest names in big tech, but it also raises the bar heading into earnings. Traders are now focused on whether the company can keep monetizing AI through cloud, search, and ads at a pace that justifies that run. When expectations are this high, even good numbers can trigger volatility if they're not good enough. Another pocket seeing action is precious metals. MarketWatch is highlighting a sharp rebound in gold and silver after a brutal meme-like slide that saw double-digit percentage losses in just 2 sessions for gold. Today we're seeing a bounce, but there's a tug of war in the narrative. One piece notes the unusual, almost social media-style swings, while another asks a blunt question. Are investors rethinking whether they need to own gold and silver at all? For professionals, this is becoming a sentiment gauge. Is this a classic shakeout that resets positioning, or a sign that some portfolios are reducing their reliance on metals as a hedge? On the macro and big picture front, Walmart is grabbing attention. Reporting from MarketWatch says the retailer has just crossed the $1 trillion market cap mark, a milestone driven by its push into technology, e-commerce, and its ability to offer shoppers some relief from inflation. That's not just a single stock story. It speaks to the health of the U.S. consumer and how tech-enabled retail is reshaping the defensive corner of the market. If Walmart can hold that trillion-dollar level, it may reinforce the idea that large-cap, value-tilted tech adopters are a key part of the current market leadership. We're also watching the policy backdrop. The IRS, according to coverage from MarketWatch, is navigating the government shutdown by leaning on prior year's funding to keep tax filing operations running through at least next week. For markets, the angle here is uncertainty. Shutdowns can delay some data, impact consumer sentiment, and inject a little extra headline risk into an already busy earnings and macro calendar. So far, investors seem to be treating it as a nuisance rather than a crisis, but any sign of delays in refunds or broader disruptions could start to weigh on spending expectations. On the risk side of the ledger, one story catching a lot of eyeballs is a personal finance piece about retirees in their 70s deciding whether to take on a $50,000 loan for home repairs or sell stocks. It's not a single ticker moving, but it underscores a broader theme. With markets near highs and rates still elevated versus a few years ago, older investors are wrestling with portfolio drawdowns, debt costs, and housing expenses. That kind of backdrop can influence how much retail money is willing to stay exposed to equities after a big run. Let's talk sleepers, names and themes I'm watching in the background that could matter more as the day goes on. In airlines, Citi's research team, as reported by MarketWatch, is flagging 2 carriers it favors for the short haul, while calling Delta a comparatively lower risk play in what it still labels a high-risk group overall. Airlines are classic economic bellwethers. When macro clouds gather, these stocks can price in that anxiety quickly. Any rotation into or out of that group this afternoon will be worth watching for clues on how traders see travel demand and fuel costs lining up. Disney is another under-the-radar story turning into something bigger. MarketWatch notes Josh D'Amaro is set to become the company's new CEO, only the 9th in Disney's 102-year history. Leadership transitions at iconic media companies can be multi-year catalysts or headwinds, depending on strategy around streaming, parks, and content. For now, professionals are likely parsing what a D'Amaro era might mean for cost discipline versus growth spending, and how quickly he articulates a clear roadmap to win back investor confidence. Into the next hour, I'll be watching whether Alphabet can hold its strength as more traders digest that AI-driven run, and whether the gold and silver rebound has legs or fades into the close. I'll also be tracking any follow-through reaction in Disney and the airlines as those stories circulate, plus how sentiment around Walmart and the consumer holds up as the afternoon data and headlines roll in. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer.